Hello traders, welcome to my screen view. In this short video today, I'll show you how to implement the Adaptive Candlestick Pattern Recognition System for trades opportunities in the market. The Adaptive Candlestick Pattern Recognition System covers the following topics: candlestick theory, trend direction, higher time frames, price analysis, statistic analysis, and code design. The Adaptive Candlestick Pattern Recognition System is a powerful and easy-to-use trend-following indicator. I love the simplicity of this trading indicator. I strongly advise beginner traders to add this trading indicator to their trading arsenal technical tools. To apply this trading indicator on the trading chart, navigate to the Indicator folder here. Search the keyword Adaptive Candlestick Pattern Recognition System. Select the Adaptive Candlestick Pattern Recognition System. Unlike the other technical indicators, traders need to select the parameters or functionalities they want before they can finally apply this technical indicator to their price chart. Once you are done checking the functionalities you need, then you can proceed further to apply it to your trading chart. As we can see, here is the trading indicator. Before I proceed to educate you about how this trading indicator works, I need to highlight indicators and their purpose so you can have a quick understanding of how the indicator works. Here are the parameter settings of the Adaptive Candlestick Pattern Recognition System. Under the Input settings, there is the Functionality settings, the Pattern Detection mode. This section helps the indicator to focus solely on the concept of the candlestick theory. Arrangements of candlesticks may form certain patterns that can potentially influence the future price action of assets that experience those patterns. A full list of patterns, grouped by pattern length, will be in its own section of this description. This script contains two modes of operation for identifying candlestick patterns: Classic and Breakout. Classic. In this mode, candlestick patterns will be identified whenever they appear. The user has a wide variety of inputs to manipulate that can change how certain patterns are identified and even enable alerts to notify themselves when these patterns appear. Each pattern selected to appear will have its profit or loss, PL, calculated starting from the first candle open succeeding the pattern to a candle close specified some number of candles ahead. These PL calculations are then collected for each pattern and split among partitions of the prior price action of the asset the script is currently applied to. More on that in higher time frames. Breakout. In this mode, PL calculations are held off until a breakout direction has been confirmed. The user may specify the number of candles ahead of a pattern's appearance, from 1 to 5, that a pattern has to confirm a breakout in either an upward or downward direction. Important functionality note: these patterns are only searched for at the most recently closed candle, not on the current closing candle, which creates an offset of 1 for this indicator execution. As we can see, the indicator also has a moving average for detecting the change in market trends. Trend direction. Many of the patterns require a trend direction prior to their appearance. Moving averages are used to determine which trend is currently taking place for candlestick patterns to be sought out. The user has access to two moving averages, which they may individually modify the following for each. Moving average type, list of 9, their length, width, source values, and all variables associated with two special moving averages, least squares and Arnaud-Legault. There are 3 settings for these moving averages. The first 2 switch between the 2 moving averages, and the third uses both. When using individual moving averages, the user may select a price point to compare against the moving average. Default is close. This price point is compared to the moving average at the candles prior to the appearance of candle patterns, meaning the close compared to the moving average 2 candles behind determines the trend direction used for candlestick analysis of 1 candle pattern, 3 candles behind for 2 candle patterns, and so on. If the selected price point is above the moving average, then the current trend is an uptrend or downtrend otherwise. The third setting, using both moving averages, will compare the lengths of each and the trend direction is determined by the shorter moving average compared to the longer one. If the shorter moving average is above the longer, then the current trend is an uptrend or downtrend otherwise. If the lengths of the moving averages are the same, or both moving averages are symmetrical, then MA1 will be used by default. Higher time frames. This script employs the use of higher time frames with a few requests for security calls. Price analysis. Price analysis is a major part of this script's functionality, as it can fundamentally change how patterns are shown to the user. The settings related to price analysis include setting the number of candles ahead of a pattern's appearance to determine the return of that pattern. In breakout mode, an additional setting allows the user to specify where the PL calculation will begin for a pattern that had appeared and confirmed. The calculation for percent returns of patterns is illustrated with the following pseudocode classic mode. This is a simplified version of the actual code. I will show you how to use the default single moving average of this indicator to buy and sell in the market. How can we use this indicator to detect buy setup in the market? To buy, first, watch out for a trending bullish market. Next, watch out for the moving average to hold the price as a support in the uptrend. Next, watch out for the price to ensure a strong bullish close of the candlestick above the moving average. Execute a buy entry at the close of the strong bullish candlestick above the moving average. Place a stop-loss order at the low of the moving average point that acted as the support. Short-term traders can ride the trend to the next swing high, while long-term traders can ride the trend and exit whenever the price closed below the moving average in the uptrend. How can we use this indicator to detect a sell setup in the market? To sell, first, watch out for a trending bearish market. Next, watch out for the moving average to hold the price as a resistance in the downtrend. Next, watch out for the price to ensure a strong bearish close of the candlestick below the moving average. Execute a sell entry at the close of the strong bearish candlestick below the moving average. Place a stop-loss order at the high of the moving average point that acted as the resistance. Short-term traders can ride the trend to the next swing low, while long-term traders can ride the trend and exit whenever the price closed above the moving average in the downtrend. Now you can see the adaptive candlestick pattern recognition system indicator is an effective and simple to use trading strategy, especially for beginners in the market. To effectively apply this trading strategy for a consistent winning record, make sure you trade this strategy in a trending market. Looking forward to seeing you in the next video. Peace.